Hey, what's up you guys? This is Junior Trader, and in this video we are taking a look at SPY and QQQ, and then also tech stocks, Microsoft, Apple, Google, Amazon, Meta, and Netflix. So let's see what's going on in the market today. Well, before that, I also want to let you know, none of this is any financial advice and it's only for education purposes. Please do your own things, guys. I'm just here providing my opinion, nothing more than that. So we have on SPY today some sell-off, right? But overall structure on SPY that we are on the daily interval, so far we are still bullish. Now, where the structure break or change would start happening, well, for that we would have to lose the 20 days moving average and also one of the levels, and in this case I would say 539.56 to $536. This, unless and until we are not losing this level, technically overall structure is not bearish on SPY. Structure is still to the uptrend. As for this pullback, as this is coming, like, can we continue much lower tomorrow as well? So for that, let's go to the hourly interval and let's talk about over there. So when you see so this, first of all, this was one of the levels, 544. Intraday, we got a rebound over here. But so if you have seen my videos over the weekend, this is what I talked about, is that if we can hold support here at this level of 544, expect it to continue to the next level. And then we have to see if what happens over there, if we break out of it to the upside or not. So you can see precisely we rejected at our one of the levels, and then we continued lower. Now the problem started to come for much more downside once we lost this significant level as well, 544, and we have been continuing lower. Right now on intraday, SPY continues to make a lower high. All right, lower high. And the next potential for this, tomorrow intraday, it can give you more pullback to the downside as long as we stay below 544. If SPY rebounds but fails to go above 544, that's just a place of rejection and can continue lower. So any position, if the price action rejects here, you have to see on the lower time frame, if your wicks are forming, price action is rejecting and all of that at this level, this would be the area for short anywhere in this region, and downside can be played with the stop loss on the other side. If SPY continues up from here, then you can expect some upside on this. Now, to the downside, I would only expect watch 200 hours moving average somewhere there, and if we lose that, then 539 is a possibility as well in this downside. And then that's where we have to see if this overall structure that technically is still bullish, if it holds into this blue box. So that would be then the area we are watching. So you have the levels, you have the structure to watch on intraday and overall structure as well, and that's SPY. Talking about QQQ, we are again, selling off, which is fine. We are technically, overall structure is still bullish as long as we are above 20 days moving average and this level as of 465. If we lose that, then we can expect much more downside. But what do we expect from here, at least intraday? If we, overall structure is going through the pullback, right? Now we are at 200 hours moving average on this. So today QQQ was so weak enough that it couldn't even hold this level 478. We lost that, and level by level we came down to the 200 hours moving average. Now tomorrow QQQ can only give rebound if it starts to close above 475, and then some rebound can come. Otherwise, look, losing 200 hours moving average will be problematic. If we start to lose this, then yes, 466 is a possibility down there, and that also is where we are seeing the structural area for QQQ overall trend. If we lose, so this is the blue box. If we start to lose this blue box, then we would have some more problem. But I would also say that we want to eventually lose 50 days moving average as well for that problem to become bigger. Otherwise, until then, this overall structure on this technically though is still in an uptrend on the daily interval. All right, that's QQQ. And you have the levels to watch on intraday as well. Accordingly, play can be taken. Microsoft. So Microsoft, a little bit struggling to go to above all-time highs, but any pullback until this level of 436 will just constitute as a pullback, and technically structure on this will still be bullish, but take partial profits in the extension. Similarly on QQQ and SPY, all those uptrends that we have taken, partial profits needs to be taken at this high on SPY and QQQ as well, all right? And then for this pullbacks into the structure, if any other more position needs to be built at this structure, you have to see at the lower time frame if those areas are holding, like double bottom consolidations and things like that. Then with the stop loss on the other side, either position can be reloaded or can be taken more, but stop loss needs to be should be taken. All right, sorry, I went back to QQ and SPY there for a second. So yeah, that's Microsoft, guys. The region of pullback is fine, and for intraday, if we continue to stay below 447 tomorrow, this can continue lower down to this level of 443, and if we lose that, then 200 hours moving average, that's also a level of support on this. As for potential price action that you have to see, okay, Apple today tried to go up, and that's fine. Technically, guys, structure on this overall is still bullish. All right, that's what I have been saying so far. And take partial profits in the extensions. Now pullbacks are coming. We got some buying happen here. Today we went up but sold off by the time market closed. So technically structure on this is still bullish as long as we are above this moving trend line as well, and also above 20 days moving average. But let's go to the hourly interval and let's take a look at that, what's going on there. So on hourly interval on Apple, if we stay above 207 tomorrow, this can continue again high up, and then you're watching $211 level. So you can see today, this is where we rejected again at the previous resistance level, significant also level marked by my indicator. We rejected there and we continued lower down to this level. Now, if 200 hours moving average has to give it a support, it has to turn up back up from here, and stop loss could be on the other side. Google, let's take a look at that, what's going on with this thing. So Google structure is bullish. Today's sell-off is just a pullback. I'm not seeing any structure to the downside, but take partial profits in the extensions. Google will keep the structure bullish as long as we are above 174.58 But in the pullback, positions are taken with the stop loss on the other side, and take partial profits in the Sorry, I said the other way. No, sorry guys, I meant to mark the stop loss down here, not up here. That's for the short position. If you are taking a short position, then stop loss has to be up there, but technically Google structure is still bullish. Structure weakness on this will only come below 174.58. All right. Amazon selling off again at nearly at all-time highs, quite a deep red sell-off, but our previous long play was above this 184.95. That's what I talked about into this consolidation, and next level was up here. Take partial profits at the levels, and then we are seeing quite a deep sell-off. Oh, and Amazon, sorry, let's go back on Amazon. Amazon will only turn in the bearish structure from here if we lose this area 20 and 50 days moving average with the loss of this consolidation and the neckline, and that is also 180, I would say. Until then, otherwise, yeah, if level has to hold, they will be held at these areas. Position, if needs to be taken, can be taken there with the stop loss on the other side. And position should only be taken, as I'm saying, don't buy a falling knife. Just because the price is at that level doesn't mean it's a buy. On the lower time frame, you have to see double bottoms, consolidations, higher pivots forming, and wicks forming, and things like that. Meta, well, technically structure is still bullish on this thing, and as long as we are above 20 days moving average, and this is pretty much the level 494. This is a pullback still. If any position is taken here, stop loss needs to be on the other side, and otherwise it's still bullish. If we lose this area, we can come down to this 50 days moving average, but that's another structural support so far. So and at that point, any other upside position, if it's taken after seeing a confirmation at the lower time frame, if a position is holding a support or price is holding a support, stop loss can be on the other side. But these would be the level you would want to watch closely for a price reaction for your position, because these are the structural areas. Netflix, quite a deeper sell-off, $17 down. However, but this is the area, the zone. As long as Netflix is above or into this blue box, but holds support into this blue box, that is 655 and 664. Structure on this is still bullish. If we lose this area, some cool off may come down to the next level of 634, but I would argue that that structure will not be fully bearish though. There's a little bit more weakness we'll have to see eventually, but these are the times to take partial profits now. All right, these were the times to take positions. And if any other position needs to be taken into these, take always partial profits in the extensions, guys. And if this is the time, if any other position needs to be taken on the reload, then if it's taken here, when you see the structural support on the lower time frame, stop loss has to be on the other side of this. All right, but that will be for Netflix. Guys, that's it for this video. If you found it helpful, valuable, hit the like, subscribe. If you need access to my tools that marks these automatic levels, and I have bots as well. Today was a bit of a red day. Well, not across all the stocks, but some stocks still came out profitable. Again, that's why I suggest spread out your positions in multiple stocks. Okay, but yeah, yeah, that's pretty much it, guys. And with that, I'll see you in my next videos. Take care. Bye.